Well, we have some huge news. Microsoft is acquiring Activision Blizzard. Activision Blizzard is a massive gaming company that makes games like Overwatch, Diablo, Call of Duty, World of Warcraft, Candy Crush, and StarCraft. Activision Blizzard is also a company that's going through a lot of internal employee issues, misconduct issues, lawsuits, and different things that are problematic, but Microsoft doesn't seem to be too concerned about that. They're buying the company for $68 billion. Now, Microsoft is one of the biggest holdings in my portfolio. I have been overall very bullish on the company. It's currently my second largest position, and I want to go over first what I think about this deal, my reaction to it, and what Satya Nadella is saying about it, and Microsoft's overall vision, and if I think that regulators will even allow this deal to go through. It is, after all, a $68 billion deal from one of the big tech companies, Microsoft. That's going to raise a few alarm bells for regulators. So we'll be talking about if this deal is even going to go through. And lastly, we're going to be looking at the fundamentals and valuation of Activision Blizzard, the revenue, the EBITDA, the free cash flow, all of that good stuff. And we're going to be comparing it to Microsoft and their fundamentals and seeing how Microsoft might look if this transaction goes through. So we have a lot of big, exciting news to get into in this episode. And if you like this type of content, make sure to subscribe to the channel, hit the little bell icon, thumbs up the video, and let's go ahead and jump right in. Now, this is my portfolio. Like I've mentioned before, I show this transparently every single week, week by week. You see real money invested in real companies and how that turns out every single week. So we have a level of transparency here that usually is not typical with most YouTubers. Most YouTubers talk about companies, they talk about investments, but they really don't show their entire portfolio on a week by week basis. That's exactly what we do here. So let's go ahead and jump into the tech and cloud computing segment. I have Apple and Microsoft as my two biggest holdings. Apple's the biggest because we have a decent amount of gains in that company, but then we have Microsoft. I have around $40,000 invested in this company because I really like Microsoft. I like the fact that their business is very resilient. It's all subscription revenue based. It has multiple growth verticals in it as well. So having said that, let's go ahead and jump into this news. Microsoft is acquiring Activision Blizzard. This is straight off the Microsoft press release. They say Microsoft will acquire Activision Blizzard for $95 per share. So they're buying it for a set price of $95. Now, if we actually go to Activision Blizzard stock, it's trading at $83. Less than $10 over the set price. We'll talk about why this is in a minute, but this is actually pretty important. Going on, we say in an all-cash transaction valued at $68 billion. So they're buying it all with cash. Microsoft doesn't have to give up any of its stock to buy this company. Now, if we go to Qualtrim Insights, this is a website that you get access to if you join the Patreon. You can look at the cash balance of Microsoft over time. They hover around $130 to $140 billion in cash. Currently, they have $130 billion in cash. And then if we look at that compared to their debt, they currently have $50 billion of debt, which some very simple mathematics, we know that they have $130 billion in cash, $50 billion in debt, which is a net cash position of $80 billion. So yes, Microsoft can literally buy this entire company in cash, no stock, without taking out any additional debt and still have $12 billion left in cash. That is incredible. Now, I'm not saying they'll pay 100% in cash without taking out any additional debt. I don't know how they're going to fund it. They'll have very smart ways of doing that, but they have more than enough cash to do this, without using any debt. Now, they go on highlighting a lot of the games that Activision Blizzard is making and the reasons that Microsoft wants them. They have Warcraft, Diablo, Overwatch, but then they have the big one, Call of Duty. That's a massive franchise. Every new Call of Duty game that comes out it's going to be a success. It's going to be a huge, huge success. That has it's kind of like the Disney effect, right? Call of Duty is a massive franchise that anytime they release a new game, it's most likely going to make a lot of money. They also have Candy Crush, which shows that they're wanting to get into mobile gaming. I think that Microsoft really wants to make a push into that because that's where a lot of gamers are right now. They say in addition to global esports activities through Major League Gaming, the company, Activision Blizzard, has studios around the world with nearly 10,000 employees. Bobby Kotick will continue to serve as the CEO of Activision Blizzard. Now, this decision is going to cause some controversy. A lot of people are not really happy with Bobby Kotick because He's been the CEO of Activision Blizzard, as there's been sexual harassment, there's been racism, there's been everything bad that can typically happen in a company. It's happened in Activision Blizzard under his leadership. So a lot of people want him out. He's saying he can fix the issue, but I personally think that Microsoft is just keeping him while this transaction goes through. I don't think they would want a change of leadership right as a transaction is going through. So I wouldn't read too much into this. I don't think that Bobby Kotick will play an ongoing position forever in the company. I think this is just to get through this deal. Now they go on, and Satya Nadella says, quote, "Gaming is the most dynamic and exciting category in entertainment across all platforms today, and will play a key role in the development of the metaverse platforms. We're investing deeply in world-class content, community, and the cloud to usher in a new era of gaming that puts players and creators first and makes gaming safe, inclusive, and accessible to all." So they also mentioned the cloud there. That's Microsoft's huge push, is getting everything into the cloud. And Microsoft is growing Azure at an incredibly fast pace. Just a reminder that even though AWS is a little bit bigger than Azure, Azure is growing quicker. Microsoft has the fastest and most consistently fast-growing cloud right now. It's been growing at rates of 50% year over year, quarter after quarter after quarter after quarter. That's pretty incredible. So I do believe Satya Nadella when he says this is going to be part of the cloud. A lot of these games will be put as part of cloud offerings. Phil Spencer says, quote, "Players everywhere love Activision Blizzard games, and we believe the creative teams have their best work in front of them. Together we will build the future where people can play the games they want virtually anywhere they want." So Microsoft is moving from a gaming specific platform like Xbox. They're going to keep that around, but they look at it as just another piece of hardware. They want their games to be in the cloud and to be accessible anywhere on any device. Now, they mentioned how this positions their portfolio. The acquisition also bolsters Microsoft's Game Pass portfolio with plans to launch Activision Blizzard games into Game Pass. This is a subscription model with Game Pass. So I've called Microsoft before the king of subscriptions. They're the company that has more subscription revenue than anyone else in the world. That's why their revenue is so incredibly consistent quarter after quarter. And this is no surprise that they're trying to do this in order to grow more subscription revenue. With Game Pass, of which they say has reached a new milestone of over 25 million subscribers. The last news we had of this was 18 million. So now they're saying that Game Pass has 25 million subscribers. This is growing pretty steadily. They say with Activision Blizzard's nearly 400 million monthly active players in 190 countries and $3 billion franchise, the acquisition will make Game Pass one more of the most compelling and diverse lineups of gaming content in the industry. Upon closing, Microsoft will have 30 internal game development studios, along with additional publishing and esports production capabilities. This positions Microsoft to be the third biggest gaming company in revenue in the world, behind Tencent in number 1 and Sony in number 2. Now we can look at how the stocks are reacting. Microsoft is down 1.46% currently today, which you could take it to mean something negative, but I wouldn't really take that because the overall markets are down. The NASDAQ is down, the Dow Jones is down, and the S&P 500 is down, all around 1.5%. So Microsoft is kind of trading in line with the rest of the market. Now, if we look at Activision Blizzard stock, it's up 27% today, which is a big spike. But the more interesting thing is that it's trading at $83, when Microsoft said clearly in their press release that we're buying it for $95. But investors have only bid up Activision Blizzard to $83. Now, why is that? Why are they only willing to bid it up to $83 or $84 instead of the full price, $95? Right now, you could buy Activision Blizzard and get a guaranteed $10-15 on this stock if the deal goes through. But that's the big if the deal goes through. That's what investors are discounting here, and they're not fully confident that this deal will go through. So let's go ahead and get some opinions on whether or not this deal will go through.
Sometimes you see something like this, Gene, and if someone else could be interested, you actually see the prey trade above 95 if there's a possibility of someone else. I don't know if anybody else could do it, and it looks like the market's not even sure that Microsoft is going to get the go-ahead on this. Why isn't it at 95, Gene?
The simple answer, Joe, is that this is going to be some good drama that's setting up, and the market already sees it coming down around the corner. And probably the title of this episode is Silicon Valley DC Collision Course. because effectively what Microsoft and Activision are doing is saying, we don't buy it, DC. We don't buy that you want to create greater control around these companies. We don't believe that you ultimately want to break up these companies. And so I think that is the disconnect, is that this seemingly flaunting by Microsoft about everything that we've heard from Washington. I suspect that the legal advice and the banking advice that Microsoft and Activision have here is top shelf, no doubt. And so I think if DC doesn't stand up and do something here, just kind of fast forward 1-2 years down the road and they start talking about greater regulation, I think most people won't buy it. Most companies won't believe that they're going to actually take control. And so I think that's the disconnect, is this is really setting up for some good drama here around how this plays out.
So Gene Munster says that this is going to set up for some drama. And that's what investors are pricing in right now, that they're not fully confident this will go through. They know that regulators in Congress have talked repeatedly about controlling big companies and making sure that they don't become monopolies. Now, ultimately, when Gene Munster is asked, do you think this deal will go through, yes or no? Here's his response.
In the end,
I think the deal gets done. I think ultimately it gets done. And part of the reason is I think that a lot of the saber rattling that we've heard from Capitol Hill over the past 2 years, I think it's been off base. And specifically, it's been anchored in this belief that doing what is best for the consumer. In the end, these big tech companies, despite, I think, frustration from many about the kind of wealth that they've created for themselves, I think that they are ultimately making consumers' lives better. And I think that you can debate, I think, the profitability side of all this, but I think it actually happens because I think in the end, DC doesn't have the ground to stand on to ultimately block this.
Gene thinks this deal will go through. He doesn't think that Congress has the ground to stand on to block this, and I find myself agreeing with him. I think the deal will go through. Let's go through the biggest reason that Congress would block a deal from a big tech company. One of them is that they have a monopoly. Does Microsoft really have a monopoly on gaming? No, they clearly don't. They're not even the biggest player in gaming. So they certainly don't have a monopoly. And even with this transaction and the staggering $68 billion number attached to it, it still can't be argued from Congress that they will have any type of meaningful monopoly on gaming. Microsoft said the transaction would make it the world's third largest gaming company by revenue, behind China's Tencent Holdings and Japan's Sony Group. So they're still going to be third biggest in the world behind a Chinese company and a Japanese company. If Congress blocks this deal, they'll make it so that there's no US company that can really compete with Tencent or Sony. So not only would Congress not be protecting you from a monopoly because Microsoft is not a monopoly in gaming, but they also would be making it more difficult for the US to compete with China and Japan. Now, the other reason that Congress or the DOJ or whoever from the government may block this deal is because it's bad for consumers. That's the argument they have to make. It's bad for people, it's bad for the economy, and it's bad for consumers. But there's no evidence of that. Microsoft is one of the most open companies in the world with how they release their games and their content. Microsoft's ultimate goal is to become the Netflix for games, having all their games widely available in the cloud on every device, every operating system, everywhere in the world. Nothing could be better for consumers to have a cheap option to get access to AAA game titles anywhere on any device. That is their ultimate goal. And the third thing that I'd bring up is that Activision Blizzard right now, in and of themselves, has all sorts of problems that are not good for consumers, not good for the employees of the company. They have huge allegations and problems with racism, sexism, overall a frat boy-like culture going on in this company. They're trying to fix it themselves, but you know that as soon as Satya Nadella buys this company and it becomes under the Microsoft umbrella, these issues are going to be fixed and fixed very quickly. They'll be ironed out right away. So even though this is a big price tag, $68 billion, other than the big number, I don't see really any valid reason that the DOJ or Congress or anyone could be too concerned about this acquisition. Microsoft's not anywhere close to a monopoly in this category. Even after this transaction, they'll still be third biggest. Overall, Microsoft is not harmful to people. They don't do anything at the expense of the consumer. They're very open with their products and they make them widely available. And this gives them the opportunity to clean up a mess that's ongoing in a different company. Now, any transaction this big, even with Satya Nadella, who so far has maintained a level of avoiding scrutiny, and even with Microsoft being so good at these acquisitions, there's still a chance it doesn't go through. And that's why investors are discounting it at $84 instead of bidding this right up to $95. If they thought there was a 100% chance it would go through, this would be at $95. So there is a decent chance this doesn't go through, but in my opinion, I think there's a better chance that it does. Now let's go ahead and talk about Activision Blizzard, the valuation of it, the fundamentals, and Microsoft, and see how these two fit together. I actually did a video a few days ago that I recorded, but I haven't released, on the valuation of Activision Blizzard, on the valuation of Take-Two Interactive, and Roblox. And I compared them all to each other. And I came to the conclusion that Activision Blizzard was actually the best value one right now. It would be the best current buy because the price has gone down so much with all the controversy that they're facing. Since 2019, Activision Blizzard had been on an uptrend. It had in fact been doing pretty good. And then recently, with the recent controversy, it traded down 38%, which made the valuation of it pretty good. But with this acquisition of Microsoft, you can tack on around 30% to all these valuation metrics. So as of yesterday, they were at a $50 billion valuation, and Microsoft announced they're going to be buying them at a $68 billion valuation. So tack on around $15 billion to it. The PE ratio, and again, you can increase these all by around 30% to see at the price that Microsoft was buying them. The PE ratio was 15, the trailing PE was 19, the price to sales was 5.6, and the EV to EBITDA was 10. All of these are very cheap. This was a cheap company yesterday. At a 30% premium, I think it gets to the range of just fairly valued, which is really good, meaning that if Microsoft is able to buy this company at $68 billion, I think that's just close to fair value. Now, moving on to some of the fundamentals of this company, do they have revenue growth? Yes, they do. Quarter over quarter, it's somewhat inconsistent because it's a gaming company. They have releases of new seasons and new games that kind of jumble their quarter over quarter revenue. But if we change this to annually, you can see that they are growing their revenue over time. In 2016, it was $6.6 billion. And then in 2020, it was 7.96. So they're growing it pretty consistently. The next thing that we can look at is EBITDA. EBITDA is a proxy for earnings. The EBITDA is growing over time, which is a huge check mark. This company's moving in the right direction. We can look at free cash flow. You get the free cash flow by taking the revenue of the company and subtracting the operating expense and capital expenditures. So basically, this is the amount of money left over after you have paid for all the stuff to run the business. And this company does generate growing free cash flow, which is a very positive sign. We can look at the net income. The net income is the bottom line of the company. This is after all the different expenses and everything that you've already accounted for. And their net income is growing over time pretty consistently. The past couple of years, it's been only positive and going up generally speaking. That's another very positive sign of the company. Now, the company does have some debt, but to Microsoft, this is relatively speaking almost nothing. They have $3.61 billion in debt as of last quarter. We can check that with their cash balance, and they have $9.72 cash on hand. So their net cash position is $6.11 billion. So if you balance this out, they really have no debt. They have way more cash than they have debt, which makes Activision Blizzard a cash-rich company. Now, they also pay a growing dividend. Of course, if Microsoft does end up buying them, this dividend will be less meaningful and Microsoft will continue to pay out their dividend. But this will give them more free cash flow, more income to be able to pay out a growing dividend. And I think it's a good sign that the company that they're buying was able to pay out a yearly and growing dividend. Now let's look at their earnings per share. Gaming companies have a little bit more wonky earnings per share. It spikes up and down as they release new titles, as they sell season passes. It's never quite as consistent as other SaaS companies just because of the nature of the business. But this is actually an incredibly good chart for a gaming company. It's growing its earnings per share pretty consistently over a long period of time. Ever since around 2008, 2009, they've been growing their earnings per share like crazy. Now, the last thing that we can look at is the shares outstanding. They are diluting shareholders to some extent. We can see the trend of them releasing more shares over time. But if you look at the nominal numbers here, 743 million shares back in 2016, and then you have 778 million shares in 2021, that's not a huge amount of dilution. It's not like they're diluting their shareholders like crazy. This is a pretty steady growth in share count, as I'm assuming they're paying compensation and stock options to their employees. But that's it. My assessment of Activision Blizzard is that before this transaction and before this 30% bump up in price, this was an undervalued company. And out of the many gaming companies available, like Take-Two Interactive or Roblox or all different options, I thought that Activision Blizzard was the best current buy. It was undervalued for reasons that I consider to be temporary, that I think will be fixed over time, and they own extremely good assets, huge franchises like Call of Duty that will bring in a lot of income, I think, for decades into the future. Now, if we mix this into Microsoft, this will affect their growth, their balance sheet. This will affect a lot of things. First of all, I don't know how they're financing this deal, but at $68 billion, they will take away about half their cash balance, roughly speaking. They have $130 billion in cash. This will take them down to around $70, $80 billion. But they do have some debt as well. They currently have $50 billion in debt. Like I mentioned earlier, they can buy this deal using all cash without raising any new debt and still have over $10 billion in cash. In my opinion, I don't think that Microsoft will do that. I think they'll raise some debt and pay some with cash. I think that would be my assumption, but we don't know for sure. Either way, they can pay for this company fairly easy without damaging their balance sheet. Now, in terms of revenue, Activision Blizzard is earning pretty consistently around $2 billion per quarter. So last quarter, Microsoft earned $44.7 billion, which is just a staggering number, but you can tack on another $2 billion to it pretty consistently every single quarter. And that's probably going to grow over time because Activision Blizzard is a growing company like we just saw. All the other metrics of Microsoft are about as perfect as you get. You can see the EBITDA is growing over time. The free cash flow is enormous and growing steadily over time. Net income's growing over time as well. All these metrics are moving in the positive. And of course, they pay a growing dividend over a long period of time. So Microsoft can consume this business, they can add it into their cloud, they can make it into a subscription-oriented revenue, and it can further their Azure growth as well. Overall, I think that if Microsoft is able to make this acquisition go through, which I think they have a decent chance, I think this is a very positive thing for this company, and will set them up very well for their gaming endeavors in the future. So right now, if we filter by the one day, Microsoft is in the red, but I think this has to do more with the broad market sell-off that's going on rather than a Microsoft-specific event. I really don't think this is related because in my opinion, when I look at this as a big Microsoft shareholder, it's one of my largest positions, I don't see anything negative. I really like this transaction. I'm already very bullish on Microsoft. I have a price target of $350. I think it will hit $350 by the end of 2022, and the company has been trading down a little bit over the past couple of months. In my opinion, after this news, I'm more bullish on Microsoft than I previously was, and I was already pretty bullish on the company. So this is something that overall, as of right now, I'm very happy about. Anyway, this is my shortened episode because of this breaking news. I'll have more content out in the future. Make sure to subscribe, and I'll see you in the next one.